This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past few months, inflation in the US has been gradually cooling from its earlier highs, but the progress has been uneven. Goods prices have softened in some areas, while services, especially housing and insurance, have remained persistently elevated. This has created a situation where overall inflation looks better on paper, but still feels high in everyday life. This week, the latest inflation data suggests that the cooling trend is continuing, but slowly. Headline inflation showed a modest improvement compared to recent readings, helped by relatively stable energy prices. However, core inflation remains firm, with services continuing to drive much of the upward pressure. At the same time, certain everyday categories like groceries and rent showed slight increases again, reinforcing the idea that while inflation is slowing, it hasn't fully settled. So what's the real trend right now? Inflation is cooling, but it's getting sticky. Instead of dropping quickly, prices are leveling off at a higher range than many expected. This creates a slower path back to what would be considered normal levels. This week reinforces that sticky inflation trend. Progress is real, but it's gradual, and certain key categories continue to resist downward movement. So how does this hit your money? For most households, this means that while price increases may not feel as sharp as before, the overall cost of living remains elevated. Rent, insurance, and services continue to take a larger share of monthly income. Grocery bills may not be jumping dramatically week to week, but they're also not falling in a meaningful way. Over time, this keeps pressure on budgets and limits how much households can save or spend elsewhere. There's also an impact on financial planning. When inflation slows but stays elevated, it creates uncertainty, making it harder to predict future costs or adjust spending habits confidently. Looking ahead to next week, markets will be watching closely for any new signals from consumer spending data and producer price trends. These indicators will help show whether inflation continues its slow cooling path, or starts to stabilize at current levels. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with